for the ultimate units update. Karen Vlcek.
Perfect.
Thank you.
Yeah, thank you guys for having me. My name is Karen Vlcek. I am with the CoStar Group. And we're gonna learn a little bit more about who and what CoStar is. So we're gonna go over who CoStar is, where does CoStar's data come from, and then we'll take a look at the CoStar data. So who is CoStar? So we're the nation's largest commercial real estate data and marketing firm. We've been around for 37 years. We're a publicly traded company with a $30 billion market cap. So we've been around for a little while. CoStar owns 30 brands. These are just a few of them. Some of them probably look familiar to you, but I have this up here because we're gonna build upon where all this data we're going to talk about is coming from. Because we're going to get to those slides and you're going to say, how did you get that? So we're going to talk about how we got it first. So LoopNet, a lot of you guys in the room probably have heard of LoopNet. That's the marketing arm. STR, we also have a hospitality information platform as well. 10X is an auction platform. And then you guys probably, if you watched the Super Bowl, probably saw the homes.com commercials. And that is our newest company. It was established a year ago, really to be like a Zillow competitor. Currently, the homes.com information is not in CoStar. We're building it up. Who knows what's coming in the future? But right now, CoStar is all commercial data. Apartments.com, you've probably seen that one as well. All of that information on those apartments is feeding into CoStar as well, is by sale, and also lands.com. So it's all building up to be the really robust information you're going to see here in a little bit. So the second way that we're getting all of this data is by all of these research methods. There's 1,600 researchers that sit in Richmond and DC, and their job is to verify data, collect the data, and update the CoStar platform. And it's updated live, so it is updated on a daily basis. So everything that you are going to see is updated in current information. And there's 1,600 of those. We're also going to talk about journalists. We actually hire journalists who curate news articles, currently what's happening locally and on a national scale. Even down to flying a Cessna through every market once a quarter. So when they start seeing land moving in the Cessna, then we start tracking, okay, what's going in there, what's going on, and we start tracking that whole construction process. Yeah, and we also hire 50 analysts and economists who are taking all this data and interpreting it. So, and we also have the largest privately held drone fleet that is collecting all the photos and flying around all the markets. So just to give you a little idea of where some of that information is coming from, we actually have a field research team too that is out there verifying data. They're walking into buildings, taking pictures of who is inside of that building, who's occupying that. We track tenants. So they're out there collecting that, have their feet on the street. And this is construction pipeline, again, the Cessna flying over every market. And the final method that we'll talk about on how we collect that data is third-party feeds. So some of these may look familiar to you, but we have a direct feed from these sites. First American is that public records data that's feeding into there. Credit Safe, Morningstar is that credit information that is feeding in there on those tenants. Intex is that CMBS loan data that's in there, as well as Newstar for demographics. And Oxford Economists for economics is for that macroeconomics data that we'll see in there. So all of that data collecting is going into the platform, which we're going to take a look at now. So the first one, we talked about those journalists that are on staff, they curate your local news articles. We just call this the your morning cup of coffee. Get in there, read that news. It does have local news up in the left-hand corner and then national news in there as well, just to keep you up to date on what's going on in the commercial real estate market. We do also, we're gonna focus on multifamily tonight, because that's what's most interested to a majority of you. But know that we also track industrial, office, retail, every asset type is available in there, down to the land that you saw with lands.com. So, well, we're focusing on that multifamily, and we track on and off markets. So if there's an opportunity that you're looking for, whether it's on market or off market, we are tracking that. What you'll see on here is the multifamily for the Boise market, so it's map based. We're tracking 1,644 properties currently. We track 5 units and above, so anything below those 5 units, we may inherently have data on, but we're not actively tracking it at this time. As the apartments.com team grows and that information matures, I'm sure that we'll see that change, but right now that's currently what we'll be looking at data for.
So Karen, your company's tracking this, but where's this, who's this available to? Who can see this?
Yeah, currently, it's subscription based. So, you can get a subscription to CoStar and have this data available to you. If there's some information that you're interested in and you'd like to see, you can always reach out. I'm happy to provide you with some information. Yeah. So there are there's filters, and you can filter any type of property out. We can look at multifamily owners who have owned properties for 10+ years, so that you can look for off-market opportunities that fit what you may be looking for. Currently on the market, though, we'll take a look at that. Maybe. There we go. So currently on the market, and we'll take a little bit deeper dive into currently on the market as we progress through this information. But you can see that there are 24 multifamily properties currently on the market for the Boise submarket. So you can track in here different criteria, identify owners' contact information, and their representation as well. So if you are looking only on LoopNet for opportunities, you're seeing probably about 50% of what's actually on the market. As that's a marketing arm, and LoopNet, there is a fee to list on there. So we do have all property information. So this is just an example of an apartment building downtown on West Idaho Street. We track all of this information on these properties, architect, owners. We go behind the LLCs, find the true owners of the property and track that information. We also track on multifamilies with just one extra click is sales comp data. So you can see what's in the area, what's comparable, and what they're doing as well as far as what their rents are. We also track downtown. A lot of the larger apartments are on apartments.com. We can also track like behavioral, what tenants are doing behaviorally. So if they're clicking on your listing, what apartment are they clicking on next when they're doing searches? So we can track behavior as well.
So can anyone just go on the CoStar website and then search for so I use PropStream for residential. But can anyone just go on CoStar and search any commercial property in the US?
You can go on LoopNet and search everything that's on LoopNet. That is public information on LoopNet.
You said 50%.
Yeah.
This is they're looking at, how do we get 100%?
CoStar, like, we talked about is it's subscription
Okay,
based.
subscribe.
Yeah,
Gotcha.
yeah.
It's oftentimes their main subscribers, and correct me,
Yeah.
I think are the brokerages.
Yeah,
Because it's not really accessible for as an individual, it's gonna be probably more costly, but isn't it
Right.
mostly brokerages who are subscribing?
We're about 35% brokers.
Oh, okay.
We're another 32% owners. And then we also have retail in there, a lot of vendors like roofing companies, cleaning companies also have a CoStar subscription just because it is a prospecting tool for them to be able to go in and say, hey, I'd like to know all the buildings. Let's say you're a roofer and you can go in there and say, I want to know all the buildings, office buildings that were built before 1990. Maybe they need a new roof, right? So vendors will use it as well.
Well, it's kind of the same, I use deal machine instead of prop stream, but when it comes to off market, does it still show like all that information as well? Like when it comes to like liens and like foreclosures, all that kind of stuff? Is it pretty updated or is it pretty like gone through and?
No, it is, I mean, it is updated. Now, if that property's been held by the same owner for, let's say, 20 or 25 years, we probably have a little less information on it. But you also have access when you have a CoStar subscription to those 1,600 researchers. So if there's information that you need, they will research it for you and update it for you, so you can find that information. So,
Okay.
yeah.
And it's multifamily 5+, and commercial and land and businesses and whatnot, and it's not 1 to 4 units. That's at this time not your repertoire,
As far as multifamily, yeah, we're 5 units and above right now is what you'll see. But inherently, there are some, you do a search in here, you can find fourplexes in here. Because we track everything that's selling in the market. So as soon as a fourplex sells, we add that data into CoStar. So it just every day as those researchers are researching everything that's happening in Idaho or across the nation, it gets updated and just gets more robust every day.
does it say how much the fourplex sold for?
So, yes, sometimes that's challenging because Idaho is a non-disclosure state. So, our researchers will call both parties, the buyer and the seller, to try to obtain that, as well as we have, direct feeds to public records as well. I won't say it's 100% on those because it's non-disclosure, but we do have that.
During data collection process, do you run into privacy and confidentiality issues?
Yeah, our researchers, they will know more details on our confidentiality, because they're the ones working to get that information. And obviously they, if somebody declines to give that information, we won't have that, right? But we also have access to like the title, companies, direct feeds with the larger title companies. So we get a lot of information from a lot of different resources. Yeah. Great questions, though. So here is where we're going to move into. We're just going to cover 2 topics now. CoStar also tracks like sales comps, lease comps. We have a tenant database, but we're focusing on multifamily tonight. So what we're going to take a look at is that market analysis, and where we have those 50 analysts and economists who are working on this data that the researchers have collected. And really, identifying what those market trends are and those insights, that competitive landscape, the supply and demand dynamics, and the investment opportunities. So we're going to dive into some of that data. Here we go, a multifamily market update. So the 12-month, last 12 months deliveries, the absorption units, the vacancy rate currently at 10.3%. And that market asking rent growth at that 0.6%. So that's a high level view. Here's deliveries, absorption, and vacancies over time. So what are we seeing here? So we're seeing, and I'm gonna read some notes from our economists because I want you guys to hear, snippets from our economists who are the experts. But again, that report, after we're done, and some of you already have it, have their full write-up. And those economists have summaries in there. They're updating those quarterly. This data and that's in here is on a daily basis. So this is live data. I pulled this actually yesterday, so it's a day old. So, but it is, if we pulled it today, it would be live data. And the economist has just said overall in the summary, we had a huge supply from the last couple of years of the deliveries. But the deliveries have steadily slowed over the past few quarters, and as a result, vacancies have likely peaked. So their prediction on the vacancies there.
Karen, what's the area for this?
This is Boise.
Boise.
Yeah, and we call it the CoStar market. So Boise includes Meridian, Nampa, Caldwell area, all the way over to right at the Oregon border. It goes over to there. But a vast majority of the properties are the Boise, Eagle, Meridian, Nampa, Caldwell.
Are these deliveries, new construction basically? Or are
Yes.
these non-rented, or what is are they first, we're talking about for sale, or are we talking about just vacant?
New deliveries are new construction. And we'll see some more information on deliveries coming up and some forecasting along with that. So we'll dive into deliveries a little bit more.
And that's why the vacancies are so high, because they're lease ups.
Sorry, I have glasses, but I still can't see that well. The yellow line, that's comparing that bar market to the full US? market?
Yes.
Okay.
Yes. Yep. It doesn't love all of my slides in here. So let's see, there we go. So overall and stabilized vacancy rates, and this is overall and stabilized in the blue and the forecast. So it's looking like the vacancy rates have peaked and they're gonna go down and stabilize.
So that just for my information, that's based on permits, right? Is that what, because when I see all you're predicting into 2028, we're not there yet.
Yeah.
Okay.
So we do track, good point. So in that we do track a property as soon as it's proposed. We track it through final planning and then we track it through under construction. So. And there are some that are proposed that never come to fruition, and that's calculated into that.
What's the difference between?
Yeah, no, I'm not too busy. I can talk.
That is a great question.
I'm just
So
on a webinar, but I'll turn it
I believe
down.
that the
It's not too
stabilized
interesting.
includes all of the US vacancies.
I was thinking it was gonna be, and here, let's speculate on
Le-
this.
Leo is at the gym up
I
in
was
Brentwood,
Thinking
and he'll be coming
stabilized
home tonight,
itself
but he
was
won't
like a
arrive till
prediction of
8:30 or
what-
9.
Darlene, can you please mute?
Cause when you're bringing
Sorry.
on new units,
Thank you.
they're not all occupied. And so I was thinking usually stabilizing, I'm stumbling, never mind. Yeah, I thought I had a thought worth sharing.
Maybe like existing construction is stabilized, and then new construction is maybe the other one, is that your thing?
Well, when we use it on pro formas, it's like,
Normalized market historical data is normalized, stabilized, and this, you say new apartment coming in online and you have occupancy and a year later, most are occupied. I think that's stabilized.
yeah.
I will, you know what I will do? I will confirm that with the economists and I'll send that to you, Stacy, tomorrow, once I get it.
Yeah, and we can.
Yeah,
follow up.
yeah.
My theory is the orange line is all rentals. And the blue is newly online rentals being stabilized and rented.
We'll do
No?
prizes next month. We all gotta come next month.
There we go.
Yeah.
You can try.
And you gotta remember.
Is the stabilized rate, I mean, I guess up for interpretation, because I know like what normal multifamily stabilization rates are, but. Like. that seems-
All of this data is up to interpretation. Every point of the data can be interpreted differently. It all really depends on what your key performance indicators are for a market. So, you know, you can interpret numbers in a multitude of different ways. So, I will say with the vacancies, just to add a note from The Economist, they're saying that the vacancies are indicating strong upwards movement from the previous year low. And the vacancy rate is trending to 10.3. But the market is downshifting from the previous high mark of 11.8. So that is going down.
When it's talking about vacancy, it's saying like you can't get a single person to go into any of the units, like at all, or it's just like one unit might not be getting occupied, like.
Well, we're tracking every multifamily 5 and plus, so it is an overall average of everything we're seeing in the market, so not one particular apartment building, if that makes sense. Okay, so vacancy compared to the US by class. So class, CoStar has developed its own classing system. And they did that so that when you are comparing a multifamily and all of its amenities in New York, you can compare it to Boise and we all have the same rating. Instead of it being A, B, C, for Boise market, this is an overall across the nation scoring system. So this is the vacancy rate based on the star system. So the Boise 3-star, Boise 4 and 5 star would be the more luxury apartments, especially the ones going up downtown. And this is, the green is Boise overall and the yellow is the US. So we could see that we had that vacancy rate peak, especially in the luxury 4 and 5 star. But it's coming down and they're all gonna equalize in 27 and 28. Vacancy by bedroom. I think the one thing to really note in here in 23, we really saw a peak in those vacancy in the studio apartments, with the 1, 2, and 3 bedrooms being within a percentage of each other.
Really interesting looking at that. If you're ever thinking about building something, maybe what the demand is for each.
Yeah.
You know, 2-bedroom or 3-bedroom. Compared to maybe the rents you're gonna get versus your cost to build.
When you can't share a studio as well as you can share other spaces too, so.
And that was really surprising, the orange line there, because obviously the cost is probably gonna be less. So there still isn't enough demand to fill a low priced studio to have it be lower than a 2-bedroom on a vacancy.
So going into rent per unit with your mentioning that, so this is rent per unit, market rent growth year over year, with the in blue being the market rent per unit, the green line being the effective rent per unit, and then the yellow being the US. So you can see where they're forecasting the rents to go.
Seems pretty
So effective rent is after taking inflation into account, or?
Effective rents, sometimes there's concessions that are made in that negotiation on that rent, and so that's taking that into account.
Right.
So market rent by bedroom. So then again, you're seeing that studio, the 1, 2, and 3 bedroom rents. I don't think your remote likes me. There we go. So construction. What's coming down the pipeline? Where is construction going from where it has been. So there's currently in the market, a little over 1,800 units in the pipeline, which is gonna increase it by 4.4%. There's 8 properties under construction currently, bringing online 1,800 units, giving that 4.4% and average number of units per building. So deliveries and demolitions. So obviously we saw a couple peaks in deliveries and especially 2023, some in 2024, but that is slowed. And that's again, based on what we're seeing come in the proposed and final planning stages. So that's that 4.4%. And the economists are saying despite an ample amount of units in the pipeline, the supply rush that the region witnessed is set to slow down. So
when you do the forward looking, how many years forward do you usually predict?
so this is predicting out into Q1 of 2029.
It's 4 years.
Yep.
The cycle in general, say for a new plan coming to have a new apartment from the inception to finish, usually 4 years, 5 years, or?
The economists are projecting some of that data too. They're using what information they have, looking at trends and making those predictions. So not all has had its proposals and permits. They're using their historical data and what they see going on in the market to make some of those predictions. We've had very little demolitions. I think this was like 18 units in 2021. You can see right here. There's a few that maybe they're predicting in 2025, but most of them are positive deliveries. So sales in the past 12 months, there have been 19. Historically, over the previous 10 years, they've been around 35. So sales of multifamily properties have significantly decreased. The average price per unit in the thousands, average price for those multifamily, again, 5+ and above, and that's the average is 3.1 million, and the average vacancy rate at sale is 18%. No, it's okay, ask away.
The cap rate for those new apartments selling and.
Yeah.
That's 2 slides ahead.
And if we don't have it up here, it'll be in the full market analysis report as well. So we tried to pick and choose the most valuable information. Maybe we didn't catch it, but it's in that report. So price per unit.
And
So
cap rate, there it is.
yeah.
Cap
Yeah,
rate is the third
cap
line
rate.
down, and I think the next slide has cap rates too. So the high, the caps where it looks like
Yeah.
4.5 to 6.5-ish.
Yeah, it's 6.4 on the high end.
For brand new apartment?
So no, these are just
Average.
sale comparables
Okay.
summary chart. So these were the sales. And it also gives them the star ratings, right? So you know where those are landing. So cap rates, yeah, more cap rates. So Boise 3-star, in orange 4 to 5, in the blue, Boise overall is the green, and then the US. So we're a little lower cap rate than, the rest of the nation on average.
Which means higher prices.
Yes.
4 and 5-star properties have a lower cap.
Yeah.
rate.
There we go. Sales volume, so here's our sales volume. Boise price per square, price per unit, and the US price per unit. So the Boise's in the blue, the US in the green. So again, higher price than on average for the rest of the US. On there, so just with that forecast, you can see that where we're still headed up. So a little information just on job growth on the economy, where it's at as far as what you can expect from your renters. Job growth in Boise and the US. Just hovering just above zero. So I mean, on the positive side, a little bit higher than the job growth of the rest of the US.
On job growth, I'd be curious about our ex-Micron person about, we're supposed to get like 2,000 jobs from Micron, right?
That's what I was thinking. I thought it was like.
Where's that?
Yeah,
I haven't been paying attention, have not been paying attention.
I have seen that they are building
they
a
have
huge
their-
facility out there.
They're flying a lot of construction people out there. I've actually run into some of them, so
Construction now, but that's the idea is to
And then-
have technical people in the future, right?
supposedly they're gonna hire, more technical people.
We have something else going on, Kina. Let's-
Meta, the Meta.
Micron just went through like a whole firing spree, I'm pretty sure, like within the last like 6 months to a year, like they fired like a ton of people.
Not locally,
Say what?
no.
Not locally,
That was,
not locally, oh. Okay.
that's probably a couple thousand. Short term for Micron native and then all the surrounding infrastructure. To support the additional business that's coming in will be the additional jobs that go to it.
It's interesting, it doesn't show up as a blip there, though. That's major, right?
Yeah.
Well, if you have I don't know what the percent.
I don't think Micron has
As a base
as
number
big an effect on the economy and employment here as when I moved here 30 years ago. When HP and Micron were neck and neck, so you could hire more people. But those companies have spawned so many technical companies here in town. You paid attention that some of them sell for $1 billion now. You got a lot of more technical companies and huge technical base of smaller businesses in this town, which I don't know the numbers, but I would think it's kind of smoothed everything out as far as the blips we're gonna see from Micron, especially HP, which doesn't hardly exist now.
No, you're right. That big Micron plant with all those extra companies that be hired. I guess I was expecting a pretty good blip in
I agree.
2026, 2027.
There might be.
It's just,
Will you include that on your question to the economist?
I will.
Will you ask them if they've factored in yet at this time, the job growth that Micron has? The construction's there, the construction workers are there, but what we don't know are the nitty gritty details, like at what point are they starting to count it as a new delivery since lots of permits fall, or at what point they're gonna count these jobs, or if perhaps this one somehow didn't come on their radar, you know?
Yeah, there is a note on here from the economist in their summary, which you guys can read their full complete summary. When you download it, right? The
Yeah,
download
the
link will
link's
be.
on the last slide too, so you can even pull it up right after this, or, you know, while you're in the room.
Yeah, they do note like primarily our population is increasing from California, Oregon, and Washington, which we already knew, but it does say that larger employers like Albertson, Simplot, Clearwater Analytics, and Micron Technology each benefit from that healthy university talent coming out of BSU, along with the increased population from California and Oregon and Washington, which have higher educational institutions, including Boise State, Northwest Nazarene. The talent generated by these local institutions could be greatly needed in a few years, with Micron's recently announcing the $15 billion multi-year investment in the region, including construction, a state-of-the-art manufacturing lab for memory devices. So it sounds like they're already incorporating that into this data.
And Micron's been actively hiring for that already.
So it could be just what's consistently attributing us to be higher than the rest of the US.
Or maybe it's
But-
even that orange bump we see there. I
It could
guess.
be right there, yeah. But I will ask the economists and follow up if they have some additional information, but they do mention the micron in here, so. So, economy and income, where Boise's in that orange, the rest of the US in that blue. As far as population growth year over year, again, from the California, Oregon, and Washington. People moving to this community. And where they expect it to continue with the forecast. There we go. So net population change over time. So the historical, we had that big 2021 influx there. So they are expecting that to start decreasing here in 25 and stabilizing.
So no, fire. California fire fund.
I know, they don't have one of those in here, but it could be why the population growth is slowing, instead of making a steep drop. So demographic change, that population growth, 12-month change, just some labor force growth and some economic growth. So the population at 2.4 growth over 10 years, a 1.4 forecast, the income growth of a 5.1 over 10 years and 3.8% forecasted. So, and then again, this link up there so you can see that full state of the market report. If there's another asset type that you'd like to see it for as well, just let me know. I'm happy to pull it and send it to you to help you guys with your businesses. I think that is our last slide.
That was amazing. Okay. That's my cue, isn't it? We'll open it up for some more questions, but I love how much you guys engage and ask questions along the way. And AVID Investors, this is Karen Vlcek from CoStar. I'm StacyA McBain from Swope Investment Properties. And Karen has shed some light on the fact that CoStar has more ways to track data than I ever really imagined was possible, including on-market comps and even the owners behind the LLCs. And it was interesting to learn that the past year brought us around 3,000 units and absorbed around 3,000 units if we kind of round generously. And it brought us about a 10% vacancy rate, which was actually down from an 11% or so spike that we had, which was our peak. And overall, beyond the past 12 months, we've really experienced a huge supply increase here, which we've all seen, which brought us that higher vacancy rate, which many of us felt, but that has indeed peaked according to the CoStar economists and their beliefs. In general, as you heard me say early on, multifamily sales are down. Some of us are feeling that. Significantly. They're down quite significantly compared to previous years. And our cap rates are below the national averages and our price per unit is above the national averages. Perhaps that relates. Fortunately, or unfortunately, we have population growth to fuel Boise's growth-based economy, even if it won't be quite as strong as that 2.4% population growth that we were seeing in previous years. It'll be a little more gentle. Did I miss anything, Karen?
No, you covered it. You got it.
What a great presentation. Thank you, Karen. Thank you, AVID Investors, for being here and for all of your great questions.
Karen, how much, you mentioned the subscription, we're small,
And
we're
feel free to ask
small,
more questions, right?
Yeah, absolutely.
so we're a fairly small investment company, but we do own things in 3 states. How much is that subscription?
Into consideration of the interest rate, the different rates.
So they do, and they're looking at those interest rates and identifying that they're not gonna go down to where they used to be. So the economists, are calculating that in.
And that does affect the price and the occupancy.
Yeah.
What does it cost to subscribe to your service?
So, the service is based, everyone gets the same service, no matter what size company you are. On the owner and investor size, it is based on the size of your company. So, if you're interested in knowing that, I'd be happy to connect with you later and we can take a look at what your pricing would be.
Okay, thank you.
Yeah.